Hello, so today we are going to look at commercial arithmetic, and commercial arithmetic, in this case we're going to look at the taxation system in Kenya. Somebody better be getting income from all types of sources: business, rentals and employment. All that money is what we call the gross income. Part of the gross income will go towards the government to be able to carry its policies, and that amount that goes to the government is what we call the taxable income. The taxable income, the way it is calculated, there are 4 different ways. Number 1 is when somebody only gets a salary, and in that case the taxable income will be the salary alone. The second way is when the person also gets allowances, so the taxable income will be the salary plus allowances. And then the third way is when the person is housed by the employer. In that particular case, we add 15% of the salary to the salary plus allowances to be able to get the taxable income. And the last way is when the person is paying some rent, which is called the nominal rent, and this is minus from the 15% of the salary. After that, the government will go to the tax brackets to be able to calculate the tax. And to be able to do that, the taxable income is supposed to agree with this tax brackets in 2 things. Number 1, it should agree in terms of time frame, whether that taxable income is in per month or per annum. And number 2, in terms of currency, whether it's in Kenyan shillings or in Kenyan pounds. After that, you go to the calculation where you have 2 main columns. One column is for the taxable income, which can be either in Kenyan shillings or in Kenyan pounds. And number 2 is the rate, which can either be in percentage or in shillings per pound. When you multiply these 2, you are going to get the tax per bracket. And you do that until all the taxable income must be taxed. After that, you add the taxes that you have gotten per bracket, and what you get is what you call the gross tax. But the government won't take the gross tax from you, is going to give you some relief, and that relief is minus from the gross tax to get the net tax or payee. And that payee is what now the government will take from you. And eventually, if you want to get the net pay or the money remain with, you take money in, you minus money out. Money in is the salary plus all the allowances, and the money out is the pay you are paying to the government plus all the deductions, which might be NHIF, NSSF, and any other thing you are paying. That is how tax is calculated. Thank you. Have a nice time. See you again tomorrow.